All right, April 24th, trade recap. I was able to get $202. Full transparency. Um, this is a brand new funded account where the first 2 days I started off terribly. So I'm working it back to green and then I'll get my payouts. But today my analysis was basically we had S&P 500 has been consolidating while Nasdaq has been running up. And because of that, I'm kind of expecting the the move down. Maybe we actually start to get a high time frame retracement. We need one, but we're at all time highs, so the market doesn't have to do that at all. It could just continue to go up. So what I see is identify this level here as an hourly gap that has held as previous resistance before, and we flip it into support. So I'm either going to long from this or we fail and then come back and I short from it. So that was the game plan. On the S&P 500, we had this hourly gap here that was holding, and this hourly gap right below it that was holding. I'm not sure if you put these together on a 4 if it'll be one gap. No, it won't. But I did see that this gap was holding. The 15-minute, at least on NASDAQ, was holding this 15-minute gap. And we swept out 15-minute lows, also tapping into another gap. So we're not failing bullish structure. On the 5-minute we have, but on the higher time frames we have not. So I'm still looking to be bullish. And then if you go over to Top Step, I note this 5-minute gap with relative equal highs. And well, actually, this one didn't exist here. It was relative equal on ES, not NASDAQ. So let me show you right there, those equal highs. And I wanted to target those out of this 1 hour gap. So come back over here to Top Step. I'm looking at the 1 minute and I see this move down and we inverse this gap and this one. So I'm waiting for a retest. We get the retest. I did not take it here because this move is a fib move. So I was thinking maybe we pull up into this golden zone and then fall all the way. But we came back down and retested that gap and held. That's kind of what confirmed the bullish bias for me. And I just waited a little bit to pull the trigger. And once we started to break this high, there's no gap here to stop us. So I'm now targeting the 5-minute highs. All these highs in this 5-minute gap. And so I get a trade around the 220 level. It was like 221 or something like that. Stop below the hourly gap. So you can see that hourly gap right there. And I did not want to come back below that. But that was the trade, something like this, and I was targeting up here. And all I'm looking for is a little $200. So I know the risk reward on this is a little bit off, but you really just expect this to sweep out these highs and then tap into at least the midpoint of that gap. So it's about a 1-to-1. And because the risk reward is off, I took it a little bit lighter with 3 contracts, 3 micros. Um, Once we broke TP1 right here, that is when I moved stop to break even. So now it looks like this, right? All upside potential. And then I hit about $200 on the trade. I took it all the way off. I'm not being greedy because I am working this account back right here. So I get about 200 on it. And then the very next trade, so I'm only up 188. I'm like, I at least want to get 200 on the day. So I waited for a little pullback and I entered along with 1 micro. Got my $15 and my realized P&L of 202, and that's it. So that's the full breakdown. Trading at all-time highs is extremely difficult. It is hard to be long biased up here because we just keep on running, but that is the bias you should have because obviously we are still running. And then whenever you're looking at 30-minute time frames and you see that we're not breaking gaps or we're not closing below them, it's just so hard to go short. That's the trade for the day. And I should have this account back green and getting a payout next week. So, y'all wish me luck. Stay disciplined.